within the boundaries of the same place or the same state or same union territory. If the transaction takes place, then it is called intrastate supply. A person who is registered under GST Act is called a registered person, and having unique identity number will be given under section 25. If any partners are there in the business, a partnership firm, then the partners are legally recognized and they are called the persons for the payment of tax. Warm welcome to 6M B.Ba student. The subject we are discussing, Goods and Services Tax. Unit 2, Goods and Services Tax Framework and Definitions. In this unit, in the previous session, we had discussed about certain information of CGST, SGST, IGST, and UTGST. I'm Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram First Grade College, Temple of Excellence. In our previous session, we discussed about Article 279A GST Council and GST Act sections and schedules and provisions of GST Act 2017. In today's session, we are going to discuss about intrastate supply and interstate supply differences. What is the difference we have here? Which one is called intrastate supply and which type of transaction is called interstate supply? And even we are going to discuss about the explanation of person, taxable person, registered person, unregistered person. In the same way, we are going to discuss about related person, distinct person, casual taxable person, non-resident taxable person, regular scheme, and composition scheme. This is a thing we are going to discuss in today's session. The first part, what we are taking here, intrastate supply versus interstate supply. If you understood this one, for the calculation of GST, it will be very easy, and even for your business concepts also, it supports you, and what is the rate has to be levied and how much you're going to levy and how it gets support for you and which type of tax has to be charged. Like for example, if intrastate is there, if it is intrastate, CGST and SGST, or CGST, UTGST. This is the tax what we are going to have for intrastate, and for interstate we are going to have IGST. So for intra it is CGST, SGST, and CGST, UTGST, any one. For interstate it is IGST. So what is then intrastate supply and interstate supply? Intrastate supply means the goods which has been sold within the state. Inter means the goods which has been sold outside the state. Like the first concept we'll take it here. Which section says us intrastate supply and interstate supply? In our IGST Act, section 7 says us intrastate supply, and section 8 defines us under IGST Act what is interstate supply. It says that when first section 7 says us location of supplier and place of supply of goods or services are both in the same state or same union territory. They're saying that within the boundaries of the same place or the same state or same union territory, if the transaction takes place, then it is called intrastate supply. And if location of supplier and place of supply of goods and services are both in two different states or union territory. They're saying that one interstate supply means when the goods or services transaction which has taken place, it is in two different states or two different union territories, then it is called interstate supply. Like for example, if we are in Karnataka, if the goods, the supplier is in Karnataka, and the place of supply for where we are making the place of supply Place of supply to Maharashtra. Place of supply to Maharashtra. So then this is called interstate supply. Here for intrastate, supplier is in Karnataka and place of supply within Karnataka. So both are inside the Karnataka only. So then it is intrastate. If it is outside the Karnataka, then it is interstate supply. So we should know that one. The tax is levied here CGST, SGST or CGST, UTGST for intrastate supply. For interstate supply, it will be IGST. This is the thing we have to know. And next concept, registration. Not compulsory, only based on the turnover, we should have the registration concept. So now they're saying that when if I want to make registration, whether it is compulsory or not, they say that when it is not compulsory. Based on your turnover, we'll say that one. If it is required, you have to register, or else it is not required. But person making any interstate taxable supply will be required to register compulsory. If I'm transferring or selling any goods outside the Karnataka, then it is compulsory for me to register under GST. Next, composition scheme. Interstate supply can opt for composition scheme. I can choose composition scheme here where the tax will be 1%. If I want, I can choose. Opt means here I can choose the composition scheme. If it is benefited for the business person, he can opt, or he can have the normal GST only. Interstate outward supplies of goods are not eligible to opt any composition scheme. They cannot take the choice of composition scheme. They should be in the regular GST norms concept, whatever we have here, rates. Composition scheme, intrastate supply can opt here, and here interstate outward supplies of goods are not eligible. Intra can make out, but interstate cannot have that one. This was the differences between intrastate supply and interstate supply. The next concept we are going to start with the word person. According to GST Act, who is called a person? A person defined under Section 2, Subclause 84 includes any individual, Hindu undivided family, company, any joint stock company, partnership firm, a limited liability partners, association of persons, that is group of persons, any corporation established by or under Central Act or a government company as defined in Section 22, Subclause 45 of the Companies Act 2013, any corporation which is established. A body corporate incorporated by or under the law of a country outside India. So that is also called a person. Any cooperative society registered as per the Cooperative Society Act, a local authority, central government or state government, society as defined under the Societies Registration Act of 1860, any trust, every artificial judicial person not falling within any of the above mentioned points. Leaving this, if any other artificial judicial person are there, it comes under this category, and these people are treated as person. These people are treated as person according to Section 2, Subclause 84. Now, for these people, registration given in the case if he is liable. If he is liable, then he has to register, or else there is no need of registration. If he applies voluntarily to register, if he want, he can voluntarily apply for the registration, or else it is not required. Payment of tax to the government, no benefit will be there. Input tax credit, no benefit for the person who is going to pay tax here. Next one. Person, taxable person under Section 22, Subclause 107 says thus: person who is registered or liable to be registered under section 24 or 22. They're saying that one, a person who is going to register under GST or who is liable to register under GST. So then for him, the registration is a person who is liable, then he has to apply for registration. If he is liable for the GST registration, he can apply directly, or he can, if he is already registered, then there is no requirement of, again, the same concept of registration here. Payment of tax to the government, yes, he has to pay the tax to the government, and even he can enjoy the benefit of input tax credit. So whatever the tax he has paid to the government, he can get back that amount when he collects the tax amount from the next movement of the goods from one person to other person. So he is going to get the benefit of input tax credit. Next we have here explanation of registered person under section 2 subclause 94. A person who is registered under GST Act is called a registered person, and having unique identity number will be given under section 25. Registration is already registered here. Yes, he will get the benefit of where he has to pay the tax, and he gets the benefit of input tax credit. For any registered person, he can get the benefit of input tax credit if he has already paid the tax to the government. Whenever he collects the tax from the next person, like for example, manufacturer, wholesaler, retailer, consumer. If manufacturer had paid the tax, he will get the input tax credit. Where he collects the tax from the wholesaler, he can keep the tax whatever already has paid, remaining amount he can pay the tax. Like for example, already paid here 100 rupees as a tax for the government here, where he collects 150 from the wholesaler, he is going to retain 100 rupees with him, and 50 rupees will be paid to the government. Now, the wholesaler has paid 150 here, he is going to collect 200 rupees tax from the retailer. He is going to retain 150, means he is eligible for ITC. So, he is going to pay 50 rupees to the government, and the retailer is going to collect tax from 250 from the consumer, the person who is going to consume the goods, and he is going to retain 200 rupees and is going to pay tax 50. So totally 100 plus 50 plus 50 plus 50. So totally finally the tax has been paid only 250. That has been paid by the consumer. The people who have paid already, they have taken their tax amount back. That is called input tax credit. The amount of tax paid by the middlemen or the person, they can get back the benefit of tax. Whatever they paid, they are going to collect from ultimately from the consumers. Next, unregistered person. The name itself says that if you have not registered, then there is no need of paying tax, or you are not eligible for input tax credit. Next one, we have related person. Person shall be deemed means assumed to be related person if such persons are officers or directors of one another business. They are saying that one, if the persons are officers or directors of the business, then they are called related persons. Such persons are legally recognized partners in business. Means if any partners are there in the business, a partnership firm, then the partners are legally recognized and they are called the persons for the payment of tax. Such persons are employer and employee. Means the persons may be employer and employee. Any person directly or indirectly owns, control or holds 25% and above outstanding voting rights in the company, then is called related person according to the Act. Who is a distinct person? Person who has obtained or is required to obtain more than one registration. They're saying that when we are selling the goods in different states, like we are in Karnataka, I'm selling goods to Maharashtra, I'm selling goods to Tamil Nadu, I'm selling goods to Kerala, I'm selling goods to Andhra Pradesh. So if we are selling goods to different states here, then automatically I have to register in every state where I'm going to sell the goods here. So that is why they're going to call me as a distinct person. Next we have here casual taxable person. Under section 22 subclause 20, a person who occasionally undertakes transactions involving supply of goods or services or both of the goods for the business, whether as principal or agent or in any other capacity in a state or union territory where he has no fixed place of business. They're saying that when I'm doing certain business here where I'm an event manager, I'll be moving from one place to other place. Wherever I go, I'll just do the service and return back here. Whenever the business has been done in one place here, I don't have any fixed place here. Whoever calls me, I'll just go and perform and I'll come. So whenever I do such type of concepts here, I'm a casual person here, casual taxable person, where I may be an agent, I may be a mediator between the two people, or I may be the main source person here, or where there are certain people are there in such a way that when involved in the business transaction directly or indirectly. So these people are called as casual taxable person, where they have to pay tax for the whatever the earnings they have made in their transactions. Which form they have to use? GSTR1, GSTR2 and GSTR3, that is Goods and Services Tax Returns 1, Returns 2, Returns 3, and also you can claim input tax credit of all inward supplies subject to conditions as applied to registered dealer. Whatever the conditions we have for the registered dealer, in the same way you can claim the benefit of input tax credit for the inward supply whatever is made. Next we have a regular scheme. What is this regular scheme? Section 9 of CGST Act says as any person registered under GST law but excluding person opt to pay under composition scheme. They're saying that if is registered under GST under regular scheme, then the threshold limit is 40 lakh or 20 lakh and is eligible for both intrastate and interstate supply. GST is calculated on the output, GST is calculated, and even he'll be getting input tax credit benefits, where if his turnover is above 40 lakh or 20 lakh, based on that he is going to get the benefit and he'll be under a regular scheme, and even he has to calculate output GST and input tax credit benefit is available for regular scheme. Composition scheme, whatever we have here, under section 10 CGST says that permitting the registered person to opt for the payment of GST as a fixed percentage on turnover instead of paying tax under regular provision. They're saying that if the limit is 1.5 crore or 75 lakhs and is eligible for intrastate supply only and is eligible only for the within the state, and ITC is not available, input tax credit is not available for him, GST is calculated composition rate into value of outward supply. They're saying that whatever the GST is there, how they're going to calculate composition rate into value of outward supply. For example, if my turnover is 80 lakhs, 80 lakhs into 1 by 100. So 0 get cancels here. So remaining 80,000 is the tax where I have to pay, and this amount is divided 0.5 at 0.5. This is for CGST and this is for SGST. So now 0.5 means 40,000 for central government and 40,000 for state government. This is how they're going to divide 0.5 if I have opted composition scheme. So where the tax rate is 1%, if my turnover is 75 lakhs or 1.5 crore, from this point I can opt composition, but I'm not eligible to claim the input tax credit whatever I have paid. So this is the benefits whatever we have, and the meaning of person of different concepts whatever we have discussed here, and go through that one for examination point of view. Any one concept of person. There'll be 2 marks question compulsorily. So go through that one, understand and write easily the concept, whatever we have here. In the next upcoming session, we're going to discuss definitions which are there for GST norms, and whichever important definitions are there, we're going to discuss in the upcoming session and go through all the definitions which supports for your future business activities. Namaste to all 6M BBA students. In today's session, we have discussed about intra-supply and inter-supply, and even we discussed about the explanation of person, taxable person, registered person, distinct person, and what is a regular scheme and composition scheme. Thank you. Namaste again to all our BBA students.